Welcome to the deep dive. We're here to plunge into a really interesting stack of sources today.
Yeah, absolutely. We're aiming to make sense of, well, our incredibly interconnected world.
Exactly. We'll be navigating everything from global financial markets, public health.
Oh, all the way to cutting-edge tech. It's quite a mix.
It really is. And the goal, as always, is to help you connect the dots, maybe in ways you wouldn't expect.
Our mission really is to pull out those key insights, those surprising nuggets of knowledge.
Right.
We've got reports from the World Bank, the Fed, Bloomberg NEF, Brookings.
Crypto News, Council on Foreign Relations, a real diverse set.
And by weaving these together, we hope to give you a shortcut to understanding the bigger picture, make you feel truly well-informed.
Consider it your fast track to those, aha moments. Enough detail to maybe spark some more curiosity, too.
Let's get into it.
Okay, so let's kick things off maybe with the foundations. Looking at global well-being, economic health. How do we even measure that? What's the World Bank telling us?
Well, a critical piece of that measurement, it comes from programs like the International Comparison Program, the ICP.
Yeah, ECP, right.
And they use something called purchasing power parities, or PPP.
Right, EPPs, okay.
Yeah,
Sounds technical, but important.
hugely important. They're fundamental, really, to understanding economic realities across borders. The World Bank uses these PPPs to adjust how we compare economies.
So it's not just about exchange rates.
Exactly. It's about making sure a dollar, say, in Ghana, reflects its actual buying power compared to a dollar in Germany.
Yeah,
You know.
got it. Makes sense.
And this lets them update global poverty lines. For instance, the May 2022 adjustments, which were based on 2017 PPPs,
Yeah.
they didn't just tweak the numbers, they significantly shifted our understanding of global and regional poverty, changed where we thought the greatest needs really were.
Wow, so these aren't just like accounting tweaks, they give a much clearer picture of global disparities.
Definitely.
Did these updated measurements reveal any other sort of big health or economic trends? Anything really jump out?
Yeah, actually. One of the most striking findings from the World Bank is that non-communicable diseases.
Things like heart disease,
Oh,
diabetes.
exactly. Those now account for a staggering 70% of global deaths.
70%, that's huge.
It really is. And it's not just a statistic, right?
Yeah,
It fundamentally reorients how global health organizations, policymakers, how they need to think about allocating resources, interventions.
it implies a massive shift in strategy.
Totally. It signals a paradigm shift away from just emergency response for infectious diseases towards more focus on long-term chronic care prevention,
A challenge needing totally new approaches, funding, infrastructure.
for sure. And beyond that, the bank is also constantly refining country income classifications, tracking progress towards the Sustainable Development Goals.
SDG, yeah.
Including looking deeper into economic inequality and assessing the impact of COVID-19 on poverty, which is obviously still unfolding.
Right, a massive undertaking. Okay, so that's a huge focus shift for global health. Let's try and connect these global economic insights to, well, traditional financial markets. How does this intersect with central banks, like the U.S. Federal Reserve?
Okay, yeah, this brings us to that crucial interplay between the global picture and domestic policy. If we look at the Fed, its main policy-making body, the FOMC,
The Federal Open Market Committee.
right, they recently put out a statement, July 30th, 2025, and they decided to maintain the federal funds rate, kept it in that 4.14 to 4.12% range.
A decision markets watch very closely,
Yes.
globally.
It signals the Fed's stance. And maintaining that rate, it reflected a moderated pace of economic activity, but they also acknowledged solid job market conditions.
Still strong labor market.
Yeah. And the Fed reiterated its commitment to its dual mandate, maximum employment, and getting inflation back to 2%.
A classic balancing act.
Always. And the broader market discussion, reported in financial news, it also keeps highlighting these persistent debates about the Fed's independence, especially in, well, a politically charged time.
Seems like the Fed is constantly walking that tightrope. So given that uncertainty, what's been the market reaction, particularly for traditional safe havens, maybe like gold?
Well, gold's performance is really telling here. It's actually rallied to record highs, pushed past $3,500 an ounce.
$3,500.
Yeah. And according to places like DailyFX and FX Street, this surge is mostly driven by safe haven demand. People are nervous about U.S. tariff uncertainty, ongoing concerns about the Fed.
It's a flight to safety, basically.
Pretty much. And what this signifies about traditional safe assets today,
Yeah.
it suggests a persistent, almost primal distrust in fiat currencies and maybe government stability when things feel volatile.
Pushing investors back to old school stores of value.
Exactly. Suggests a deep apprehension about what's coming economically.
Okay, so we've looked at the shifting bedrock of global finance. It feels like a natural jump now to think about digital finance. How is that world responding or even reshaping things? Let's talk crypto, AI, that whole evolving landscape.
Yeah, this is where things get really fascinating, the intersections here. In the crypto markets, Bitcoin recently retook the $111,000 mark.
111K, okay.
And you see XRP consolidating just under $3. But the big story, maybe, is the growing institutional involvement.
Right, that changes the game, doesn't it?
Absolutely. It changes the perception. You have major players like Strategy, Bitmine Immersion. They're dramatically upping their Bitcoin and Ether holdings. We're talking tens of billions of dollars collectively.
Serious money flowing in.
Very serious. And even traditional finance names like Gemini, they filed an S1 for a U.S. IPO.
An S1. That's the big step before going public.
Exactly. Signals their intent to sell shares, raise capital. They're aiming for about $317 million in a $2.22 billion valuation. It shows crypto firms are maturing, entering the mainstream financial system.
That institutional buy-in really does change the narrative. But what about the, let's say, more controversial side, the politically charged stuff, these new tokens popping up?
Yes. Well, these politically linked tokens, like one called World Liberty Financial or WLFI reports link it to the Trump family, they definitely generate headlines and lots of volatility.
I can imagine.
This WLFI token, for example, apparently dipped 30% right after its debut. There was even talk of token burning to reduce supply.
Token burning. That's basically destroying tokens to make the remaining ones scarcer.
That's the idea, yeah. Like shredding currency, but digitally. And you even had California Governor Gavin Newsom playfully teasing about launching his own Trump corruption coin.
Okay, so some political theater involved there.
For sure. And look, we're just reporting what the sources say here, staying impartial. But these examples show how new digital assets can get tangled up with political narratives, often driven more by hype and speculation than maybe underlying value.
Which must be a headache for regulators.
Definitely presents unique challenges when they're trying to figure out what's a legitimate financial instrument and what's something else.
So what is the regulatory environment like for these new digital assets? How are governments trying to get a handle on this?
It really highlights that classic problem. Regulation trying to catch up with super fast innovation.
Yeah.
In the EU, for example, their markets watchdog, ESMA, they've raised concerns, not about the tech itself, but about investor misunderstanding, especially around tokenized stocks.
So people maybe not fully grasping what they're buying.
Potentially, yeah. Even while ESMA supports the underlying technology. Meanwhile, you have platforms like Kraken and Bakkt actively pushing forward, bringing tokenized equities to the Ethereum mainnet. Xstocks launched, 60 of them?
So the market is moving ahead anyway.
It is. And in the U.S., Congress is coming back with a focus on market structure legislation for these assets. But here's where it gets really interesting. Compare that to Singapore.
What are they doing differently?
Singapore's taking a much more proactive stance. They're actively innovating with live AI systems, refining their crypto licensing frameworks.
So less debating, more doing.
Kind of, yeah. It contrasts pretty sharply with the West's more cautious, debate-heavy approach. And the implication is potentially huge. Singapore could position itself as the hub for future crypto innovation.
Attracting businesses and talent that feel held back elsewhere.
Exactly. It's a strategic bet, really. Fostering growth versus trying to mitigate every single perceived risk up front.
That difference in philosophy is really significant. Okay, let's dig into that intersection you mentioned, AI and digital finance. How are these two massive forces starting to merge? What new capabilities are emerging?
We're already seeing quite a bit of integration. Things like ChatGPT, Grok, crypto traders are using them for sophisticated sentiment analysis, trying to get strategic clarity from just masses of data.
Using AI to make sense of the noise.
Precisely. Then you have companies like Kite AI. They just raised $18 million, their goal, to bridge stablecoin payments and autonomous agents.
Meaning AI programs making transactions.
Effectively, yeah. AI agents transacting directly on the blockchain. It's quite futuristic. And then there's the broader geopolitical angle. Brookings points out something interesting.
Yeah.
That overly aggressive bans on AI chip exports to China might actually backfire.
How so?
Well, the thinking is it doesn't necessarily stop China's AI progress. It might just spur them to become self-sufficient faster, maybe even develop more advanced tech on their own, or it could lead to retaliation impacting global supply chains. It shows the deep economic strategic layers here.
Right, complex unintended consequences.
Definitely.
Yeah.
And we're also seeing practical applications emerge. Avalanche and Toyota blockchain, for example, they're exploring tokenizing mobility. Think autonomous robotaxis integrated with blockchain.
Blurring the lines between digital and physical even further. Fascinating stuff. What about the data side? The tools driving our understanding in this super fast-moving crypto space.
Yeah, this is really ushering in a new era of, maybe, transparency. Platforms like Sentiment, CryptoQuant, they provide what's called on-chain analytics.
On-chain, meaning directly from the blockchain ledger itself.
Exactly. Unlike traditional finance, where a lot of trading data is hidden or delayed, blockchains are public, immutable. So every transaction is recorded, visible.
So these platforms can see everything in real time.
Pretty much. They can provide this unprecedented level of insight into aggregate investor behavior, track the big players, the whales, analyze social media sentiment from crypto communities, monitor development activity.
Wow.
FX Street actually notes that this data-driven approach, it really marks a new era of, maybe, financial truth, offering insights that were just impossible before.
Okay, so we've explored finance, tech's cutting edge. But we can't really get the full global picture without looking at some critical challenges, geopolitics, public health, and crucially, how interconnected these areas are, often in overlooked ways, right?
That brings us to a really important point, especially looking at U.S. trade policy and tariffs. Sources like the Council on Foreign Relations and Brookings have analyzed this.
Right.
And recently, a federal court actually ruled that most of former President Trump's tariffs were illegal.
Okay, so legally challenged.
Yes, but the legal battles are ongoing. And the risk of trade war escalation persists. That creates significant uncertainty for global businesses, for global output. It's not just legal theory, it causes real economic instability.
Ripples of uncertainty.
Exactly. And again, just reporting what sources indicate, former President Trump characterized the India-U.S. trade relationship as a, quote, totally one-sided disaster. It illustrates the high stakes involved in these trade negotiations.
Understood. And it's clear trade policy, even when facing legal hurdles, has far-reaching effects. How have these kinds of geopolitical shifts then impacted global cooperation, particularly in public health?
This really underscores the fragility of some of our global institutions.
Yeah.
Take the U.S. withdrawal from the World Health Organization, the WHO. That had massive systemic implications.
Not just symbolic.
Not at all. And we've reportedly seen other nations, like Argentina, follow suit, with Hungary and Russia apparently considering it too. The U.S. was the WHO's largest donor.
Contributing a significant chunk of their budget, wasn't it?
Around 16%, yeah. So the withdrawal doesn't just cut funds. It drastically impacts vital global programs, surveillance of emerging infections, HIV programs, malaria control. It creates huge gaps in global health security.
Dangerous gaps.
Very. And furthermore, look at USA, a key agency for international development. Reports indicate something like 5,800 out of 6,200 contracts were terminated. A projected workforce cut from 10,000 down to maybe 1,000.
That's an enormous reduction in capacity.
Immense. It affects the ability to respond to global crises across the board.
A sobering picture of international engagement. And it seems, unfortunately, that our domestic public health infrastructure is also under, well, unprecedented strain.
It absolutely is, yes. We've seen alarming reports of firings of U.S. public health officials, an estimated 1,200 employees at the NIH, the National Institutes of Health, many apparently promising young investigators.
And the CDC.
The Centers for Disease Control and Prevention, the CDC, also saw big reductions. Around 1,100 individuals, maybe 750 fired, 400 voluntary retirements.
That's a lot of expertise walking out the door.
It is. And the profound long-term consequence of losing that specialized knowledge. It's a loss of institutional memory, it fractures the pipeline for future experts, and it just compounds the stress on state and local health departments.
Which were already stretched thin from the pandemic.
Exactly. It fundamentally impacts our ability to prepare for whatever comes next.
So, beyond just the numbers, what are the tangible, immediate consequences? Do the sources give real-world examples of this impact?
We do, and frankly, it's alarming how quickly effects can manifest. The measles outbreak happening right now in the U.S., that's cited as direct, tragic consequence.
Measles? I thought that was largely eliminated.
It was, but it's back. Over 130 cases across 7 states in just the first 2 months of this year. including, tragically, the first measles death in the U.S. in a decade, an unvaccinated child in West Texas.
Oh, that's awful.
It is. And compounding this, reports show 31 out of 49 states have MMR vaccination rates below the 93% threshold needed for herd immunity.
Below herd immunity.
Yeah. And we've also seen vaccine advisory committees postponed. ACIP, the Advisory Committee on Immunization Practices, its credibility has been questioned, and it normally gives crucial guidance on vaccine use.
So delays in recommendations.
Yes. And even the VRB PAKE meeting, that's the committee that determines the flu vaccine strains each year, that was canceled.
Cancel, but we need that for the annual flu shot.
Right. Experts like Tom Bollicki at the Council on Foreign Relations, they warn that these cuts create dangerous blind spots. They allow health threats to incubate undetected because the infrastructure for surveillance and response has been so severely weakened.
It sounds like a crisis really playing out at every level, down to our local communities. What's the view from state and local public health leaders? Someone like Manisha Juthani, I think her insights were in the source material.
Yes, Manisha Juthani's perspective is crucial here. It really underscores the fragility, the reliance of local systems. She noted that state and local health departments like Connecticut's, which relies on 154 federal grants, they face immense uncertainty now.
Because the federal funding and support is less reliable.
Exactly. They depend heavily on federal partners for specialized expertise, especially for rare diseases or new threats that local departments just don't have the capacity to handle alone.
They need that backup.
They do. Now, thankfully, some CDC data is apparently back online. But local officials like her are advising communities to lean more heavily on their state and local departments for information now.
Highlighting the vital role of that grassroots public health work.
Absolutely. It's almost a call to rebuild trust and capacity from the ground up, even as federal support seems to be dwindling.
That gives us a very clear, if concerning, picture. Okay, let's try and end on a more hopeful note. Are there deliberate efforts, positive trends towards sustainability, and maybe a better future?
Yes, definitely. The energy transition, for instance, highlighted by Bloomberg and ETH, offers quite a bit of optimism.
Green energy.
Yeah. We're seeing data centers, interestingly, driving more demand for green energy. And globally, investment in renewable energy has actually hit new records.
Some money is flowing into renewables.
It really is. Bloomberg and ETH reports, like their electric vehicle outlook or energy transition investment trends, they paint a pretty clear picture of this ongoing shift. It feels like momentum is building.
What's significant there? Is it just the investment amount?
It's not just the amount, though that's impressive. It's that the economic drivers seem to be aligning more with environmental goals now, becoming good business, not just good policy.
That's fantastic to hear. Potentially a real turning point. How else are investors maybe contributing to social good, environmental good, beyond just green energy?
This is where impact investing really comes into play. It's a concept championed by the Global Impact Investing Network, or GIAN.
Impact investing. What's the core idea?
It's not just about avoiding harm, like traditional socially responsible investing sometimes is. It's about intentionally aiming to generate positive, measurable social and environmental impact, right alongside getting a financial return.
So doing good and doing well financially.
That's the goal. And it's not niche anymore. The market is valued at 1.571 trillion US dollars, managed by nearly 4,000 organizations.
Wow, 1.5 trillion. That's substantial.
It is. And the GIN provides tools to help make this happen, things like an impact target setter, an impact quantifier, frameworks for climate solutions investing.
Making it more rigorous, measurable.
Exactly. And to make it concrete, they share case studies, like one about empowering women farmers in Vietnam through targeted investment. It shows how capital can be deliberately used for profound, positive change globally.
Proving that profit and purpose really can go hand in hand.
That's the demonstration, yeah.
Well, we have certainly covered a huge amount of ground today, from those fundamental measures of global economic health, the Fed's actions,
to the dizzying pace of crypto and AI innovation.
The really profound challenges in geopolitics, public health.
And wrapping up with some hopeful progress in sustainable investing. It's a lot.
It really is.
But I think the core takeaway, weaving through all these different sources, is just that profound, often surprising interconnectedness.
Right. How everything affects everything else.
Exactly. Decisions, developments in one area, they inevitably ripple through others. They shape our collective future in ways we're only starting to grasp.
And understanding those links feels more crucial than ever.
Absolutely. for navigating the world ahead.
So we leave you with this thought. In this era of really rapid change, shifting global priorities, where do you see the greatest opportunities for meaningful intervention? And maybe how can your own individual actions connect to or even contribute to some of these large-scale trends we've unpacked today?